So I've sold all my US stock holdings last Monday.
What? Everything?
Everything, 100%.
Whoa, this is a surprise. But why? But why did you decide to do that?
So I sort of decided it last weekend, and I have
Mhm.
like a set of reasons, and some more reasons got added during the week as well. So I'm like even more convinced now that we have a local top, and obviously, like I'll keep a close eye on the levels, and if I see that okay, there is some chance for the market to start recovering, I might buy back in at low prices. But yeah, for now, I just sold everything.
I think this is surprising news, Bia, but I think let's debate this.
Yeah,
What do you say? I
let's
think
do that.
I think up AI bubble is probably a reason why you feel everything is more bubblish. I think that's one reason why you have sold. I feel
Technical.
technical and a lot of the other news. I'm still bullish, and I'll debate for the market. And
Uh,
let's get right into it.
cool. I think I'll start off with the technical analysis part of it.
Mhm. Mhm.
So I'll just share my screen. So I get a lot of my technical analysis ideas from this technical analyst called Gareth Soloway, and yeah,
Okay.
so he shared this chart like around 10 days back.
Mhm.
So this is a semiconductor ETF SMH, and in the past 4 years, uh, like there have been three instances, when it has gone up 102% from its 200-day moving average, this line,
Mhm.
and this is the third time that it is happening. And in the past two times, what has happened right after it has gone up 102%, it has come down to the moving average, and I'll show you the percentage.
Mhm.
So it has come down around 40% or more than 40% towards the 200-day moving average. So
Right.
this is the first thing. So again, it's like a very short
And it has
pattern.
already gone up 102%, you're saying?
Yeah, it has already gone up 102%.
Okay.
So I don't know if it'll fall by 40% or lesser, but yeah, I expect it to fall at
And this
least
is all the
15%.
semiconductor related stocks.
Yeah, because like I think they've done the best, like they've given the best performance in the past year or so. So
Okay,
yeah,
got it. Let me counter this way. I think, again, I've not seen this graph before, but one of the reasons I think what could happen is that semiconductor as an industry has been a
yeah,
very cyclical industry before this AI era, right? As
yeah,
you might already know. I feel honestly that this cycle is very different. So I think that this graph this time it is not cyclical because I think the AI tailwind is something that is very different this time, and I have a feeling that it will definitely not go 40%. I mean, unless there is a very substantial reason for it to,
yeah,
because the primary reason why I think it used to happen in the past is that the earnings and revenues of all of these companies involved in this semiconductor market used to fall down right after the
yeah,
cycle goes away, which I
yeah.
don't see it happening this time. Can there be a correction? Maybe yes, but I don't think it is going to be as cyclical as it was in the past. That's my take on
Yeah.
this.
So I agree that the correction might not happen as deep,
Hmm.
and like I actually would not suggest this for most people
Hmm.
because timing the market is one of the hardest things to do.
Right.
But there are like a lot more factors. So even for technical analysis, I'll share like another chart,
Hmm.
which is the S&P 500 chart,
Right.
and again thanks to Gareth Soloway who like whose inference or whose technical analysis this I'm sharing. So he shared three trend lines. So one is starting around 6 months back in around June, July, or the starting of July. So it's touching the tops 3 to 4 times, and yeah, from here again it has gone down. It might bounce back up, but yeah, this is just the first one. Now the next one, it is touching. It's coming from October 2023.
Hmm.
And if you see it again is sort of touching all these low points, and then it continues onto here. So this is the
Hmm.
second converging line, which is
Right.
converging in the same area. And then there's a channel which started off during COVID. So at the
Right.
bottom of the COVID crash, from that time till now, this channel has been respected. Maybe it won't be in the future, but for now, I think the convergence of all these trend lines and channels. So yeah, a small correction maybe, but yeah, like if not for all the other factors, yeah, it might just end up being a correction. And I actually honestly don't mind buying the stocks like 5% higher,
Right.
uh, than having to go through like a downturn of 20-30%.
Got it. Got it.
So
Yeah.
yeah, that's a huge risk I'm taking for sure.
Understood. Understood. Yeah. I mean, technicals, as you already know, I'm not a very technical investor. I'm more of a fundamental investor.
Yeah,
For me, the chart definitely looks compelling. But I am coming from a point that the market definitely needs, like, for example, for a sell off to happen, that is, let's say, a 20% sell off on S&P, right?
yeah,
There has to be a some sort of a very fundamental reason. And I have generally, what I have seen in the markets is that huge crashes, like if S&P was to correct by 25%, we would call it a crash, right, of
yeah,
some sort. uh, for that to happen, I think there has to be a very substantial change in the earnings of the company. And I've
yeah,
recently seen a chart where in the recent year, now we are in November, so in October,
yeah,
almost all companies, all major companies that we care about, have almost reported earnings, except for
yeah,
Nvidia, I think. And what I've seen is that almost all companies have beaten expectations, almost all. So
right,
that's one big reason that could have become a reason for, let's say, companies to, or market to say that the earnings don't hold as good, or the projections are not as good, and let's just sell all of these stocks. I don't see that fundamental reason.
yeah,
Second could be the geopolitical reason. I see that, and the biggest one is the US China war.
yeah,
Trump has recently met Xi Jinping, and looks like they're not going to escalate anything for at least the next 6 months.
yeah,
Very volatile creatures, but that's another thing which I feel is not gonna like random tariffs will not be applied by any of the countries on each other and stuff like that.
yeah,
So if these two are not the reasons, obviously if there is another black swan that nobody sees coming,
yeah,
obviously I don't know about that, but because I don't see anything here, I still believe that this could be a very short term correction,
right,
and we should be buyers in this and not sellers.
yeah,
That's my fundamental take. But also, during this week we were talking about this AI bubble theory,
yeah,
and there was a very interesting diagram that was floating on the internet.
yeah, I'll share that.
So I think this is one of the major concerns, though, right? Why
Yeah,
people uh, still believe, why all of this is a bubble and stuff. So yeah,
yeah. I think that Sam Altman video link also will share,
yeah,
probably
yeah,
in the
yeah. I can
comments or
show that.
somewhere. So yeah, like there are a lot of companies related to AI who are doing cyclical investments. So I actually made a video on this exact topic recently as well. So
Yeah, I saw that.
yeah, so like Nvidia invests in some company, and then that company kind of partners with Nvidia and buys their chips with the
Yeah,
same money which Nvidia would have given them. So it's like even if they don't actually have the money which they're projecting that they'll invest in the company, they can still take a round trip. The money can just be in the air
yeah.
and take a round trip.
I
So
mean,
it's
uh,
happening with a lot of companies. So
a lot of companies, yeah, almost all the biggest names that we know are kind of culprit in this, except for, I think, Google is not really involved, but almost everybody else is. But
yeah,
primarily, just to give people an example, right?
yeah,
So one of the biggest buyers of Nvidia chips is OpenAI, right?
yeah,
I'm taking one of the bare arguments, and then I will give my counter argument. But
Yeah.
one of the biggest buyers of Nvidia chips is OpenAI, right?
Yeah.
Nvidia invested $100 billion in OpenAI. And guess what will OpenAI do with that $100 billion? They will go and buy Nvidia chips,
Yeah.
right?
Exactly.
And Nvidia will be able to show that additional 100 billion of revenue, right? Which will give them more valuation. This is the whole theory. To a large extent, this is right. But I also want to say, and when people say this, people now compare this with what companies used to do in the dot-com era, right? And when the dot-com bubble happened and then the crash happened, right?
Yeah.
Is the bigger companies used to invest in their own customers, and then their customers then invest that money back into the company, which this company shows as a revenue and hence higher valuations, right? This
Yeah.
is the whole funda. uh, what I want to say is that before this AI era, this has been happening for quite some time. If I just take one sector for example, all of the cloud computing companies, right? Google, Azure, AWS also, for example, they have been running a lot of programs for startups
Yeah.
where they give a lot of funding to startups, right?
In form of credits.
In form of credits and other investments also, which in turn those companies end up, and the criteria is that I'll only give you this investment if you host everything on Google Cloud or Microsoft Cloud or
Yeah.
AWS, right? They
Yeah.
in turn become very big customers for AWS, and they are betting on these companies because they think that these companies will become even larger customers of AWS and Google Cloud later on, right?
Yeah.
So this has been largely happening. We are pointing it right now because the numbers are huge,
Extremely.
right?
Extremely big.
Extremely huge, right? But the point is that this is not a new thing that these capitalist companies have been doing, right?
Yeah.
And obviously, because capital is limited, I think one of the or from their POV, you would want to also say that Nvidia also wants to, you know, it will be foolish for them to not ride this wave of the models,
For
right?
sure. Yeah.
Why should they not be allowed? Let's say for example tomorrow something happens, and if nobody is going to buy the chips, why can't they offset their risk of investing their money in the models as well? Why can't they invest their
Totally agree.
money in OpenAI? And if OpenAI succeeds, Nvidia succeeds too. So although there is this theory that they're betting this money to just get more orders, I believe one of the biggest differences from the dot-com bubble and the AI bubble, or it's not a bubble according to me yet, is because in the dot-com era, what was happening is that everybody who was laying optical fibers, right?
Yeah.
There came a time where there were not enough customers to use that internet bandwidth, right?
Okay.
Because we had not still built applications on top of that, right? All of the applications that all of us use today were not built then, right? Hence there was not a really big use case of using all of this internet, right? It took time for the world, it took about 10 years for the world to really use all of the internet. And after 2010, and when iPhone came along and when all of these things happened, I think people became big consumers of internet. Here in the AI era, I don't see that. Every chip that Nvidia produces, they have a customer for.
That's true.
Every data center that a Google, Azure, and or AWS builds, everything is sold for. All of these companies in their recent earnings, which were fantastic earnings, by the way, they have reported backlogs of hundreds of billions of dollars. It means they already have contracts for hundreds and billions of dollars, which they are not able to serve, which they will serve in 2026. Hence, I am bullish on the fact that their revenues are already taken care of till 2026. And
Okay.
if something is going to happen after 2026, we'll take a call at that time. Why should I sell a stock for something that's going to happen in 2026? Right? People were telling me that in 2012, when this movie came out, that the world's going to end. So I believe in when it will happen. We should take a call on that. But I feel in the short term, bears can sound smart, but bulls will make money.
So If you noticed, right,
Hmm.
even though all these tech earnings came very well, beyond expectations, cross expectations
Yeah,
for most good big tech companies, even then, the market is not able to sustain that steam.
yeah.
From what I see on the charts, uh, like that bullish momentum is starting to fade off
Hmm.
in the charts. And also what I heard, again from Gareth Soloway, that like since the a couple of weeks, the last 2 weeks, what is happening is there is institutional selling that is happening slowly in the first half of the trading day, and then they just immediately stop selling at that halfway point, and
Right.
then sort of the retail investors
Retail
buy
buyers
that
come in.
up,
Yeah.
and like the market ends up either going flat, or if the retail investors don't come in as
Right.
hard, then it goes down a bit.
Right.
So that is like another reason why I'm sort of worried, because both of these factors, right? The bullish momentum losing steam even after fantastic earnings,
Right.
plus this too much of insider selling. So I don't know what is brewing, but yeah, I'm apprehensive, very
Yeah.
apprehensive.
I feel you're right in saying that the market has fallen even though the companies had great earnings. But I feel, yeah, that one of the bigger reasons was that before the earnings happened, almost everybody had an idea of these companies are so huge, and there are often press releases about how their core businesses are performing. Everybody almost knew that they were going to come out with good earnings. So I feel that it was already priced in, right? And I think what is happening right now is more like a sell the news event,
So
where
yeah,
there's a saying in the market that buy the rumor and sell the news.
yeah,
So I feel it's that, and I see it as a profit taking thing by the institutions.
yeah,
But as a long term investor, I feel we should be buyers. Another reason I want to say is that for a lot of these uh, great, I mean, the bigger bet here that I am at least taking is that the institutional money that you talked about, right? That's the big
yeah,
money that has to come in the market for it to go even 10% higher from here, right? Very
yeah,
difficult for retail investors to do that.
yeah.
So there's this data that there's more than 1.5 trillion dollars that's still sitting in money markets, right?
Okay,
And largely when you're talking about money markets, you're still saying that they are getting right now, based on Fed's rate, I think they would be getting about 4.5%,
yeah,
right? The idea is that by mid next year, Jerome Powell will have to cut interest rates, right? That's the bigger bet here. And if he does, then on that 1.5 trillion dollars, you will be getting an interest rate of about 2.53%, which I
okay,
feel will not be enough. And when
for
you
that,
see companies like Robinhood, which we'll discuss in this podcast, Google, Amazon, and all of these companies doing really well,
yeah.
they will be, I think, forced to put their money in the market. And that's where we'll see the next leg up for this market.
That's possible, because like since a few months I've heard some YouTubers saying that even like I think earlier this year I heard a figure of $6 trillion sitting in money markets. So
Yeah.
like again, I don't know
Yeah.
where to
Basically, the
check
number
that.
is huge. Yeah. It's some
The number
insane
is
number.
it's in
But yeah.
trillions. So yeah, if and when that happens, for sure there'll be like a big rally.
Right.
But again, like as Jerome Powell in this latest Fed rate cut announcement, he gave a hint that most
He
probably
might not
they
cut.
won't cut interest rates in December.
Yeah.
So I think the markets were not sure about that, and they kind of got that shock as well. So that also might be like a reason, why the market fell.
Yeah.
But also, some private data was released last week that showed that the October job cuts hit their highest level
Yes.
for any month since 2003. So it's like 22 years.
Yes.
So if that data comes out to be true, then yeah, they might have to cut interest rates in December as well.
Correct.
But
Yeah.
the government shutdown, the
Yeah.
longest
That
government
is not
shutdown
helping
in US.
anybody. Yeah. That I think is
Exactly.
one of the bigger reasons why everything is becoming uncertain, right? Because
Yeah.
market absolutely hates is that if you have bad news, you give me bad news,
Yeah,
but you at least tell me the bad news. Not knowing anything is a bigger concern for the market.
exactly.
And I think the government being closed right now is a big reason. But I am again hoping on the fact that this will not continue on for long, and these guys will settle amongst themselves, and the government will reopen, and it will bring in that surety that everybody is looking for.
Yeah, if that comes, or whenever that comes, that will definitely be, like a it'll give like a boost to the stock market for sure, because right now, like, industries like travel are hurting a lot. I read somewhere that the average delay time for a flight leaving in the US, the average delay has gone up by more than 1 hour
Yeah,
now.
yeah, I heard that.
So
Yes, a really
like,
bad situation. Yeah, can't believe it's a developed country. But yeah, so that's
that's
that. I think I also wanted to share one more big argument that people had. So what happened was, and I'm just going to show a video where Sam Altman was on a podcast with Satya Nadella. And for people who don't know, Sam Altman is the CEO of OpenAI, right? So a lot of bets are on this guy as to what his next move is, and he always talks about, I'm going to build trillions of dollars of data centers and stuff.
the
There's always
future.
less compute and stuff like that, right? So let's just hear. I don't want to spoil it for people, so I'm just going to share the screen and play that clip.
With all that said, OpenAI's revenues are still a reported $13 billion in 2025. And Sam, on your live stream this week, you talked about this massive commitment to compute, right? 1.4 trillion over the next 4 or 5 years with, big commitments, 500 million to NVIDIA, 300 million to AMD and Oracle, 250 billion to Azure. So I think the single biggest question I've heard all week and hanging over the market is how can a company with 13 billion in revenues make 1.4 trillion of spend commitments? And you've heard the criticism,
First of
Sam.
all, we're doing well more revenue than that. Second of all, Brad, if you want to sell your shares, I'll find you a buyer. I just enough. Like, people are. I think there's a lot of people who would love to buy OpenAI shares. I don't think you would
Including
want to sell,
myself. Including myself.
People who talk with a lot of like breathless concern about our compute stuff or whatever that would be thrilled to buy shares. So I think we could sell, your shares or anybody else's to some of the people who are making the most noise on Twitter, whatever, about this very quickly. We do plan for revenue to grow steeply. Revenue is growing steeply. We are taking a forward bet that it's going to continue to grow, and that.
Yeah, so that was the part. The idea here that a lot of people were talking about, and this just happened this week when the market's correcting, is that first let's look at the logic. Right, the logic is very strong at the surface. Right, how can a company that's making $13 billion right now commit $1.4 trillion of investment? Right, the math is not mathing here, right? And the biggest AI pumps that we have seen with AMD and Oracle and all of this is because they have announced their partnerships with OpenAI, right? Where OpenAI has committed to buying billions and billions of dollars worth of either compute or chips or whatever, right? With these companies. So that's the fundamental thing. And the why so the market is concerned for two reasons, right? One is obviously the math's not checking out, and second thing is, why did he get offended? Right, he
That's
clearly
true.
got offended.
Yeah.
Right, like why would you get offended if if you have a very logical answer to that, just throw the answer out there. Why are you gaslighting that guy? He's an investor in OpenAI. And so what I think about this is that obviously very very bad answer given by Sam Altman. That's one. Second is, if we remove this noise under the hood, if you see, then later in the podcast he says that OpenAI is set to m- make a revenue of about $100 billion by 2027.
Okay.
So that's one. Second is this $1.4 trillion. This is not an obligation entirely by OpenAI. This is almost like a half and half. Half has to be put up by the partner companies, and half has to be put up by OpenAI, and it will be over 5 years. So
Okay.
now suddenly, if you see the math of a company making $100 billion has to spend $700 billion over 5 years to build compute. It now feels like a okay math can be done, right?
It's
Obviously
doable.
there'll be other expenses and stuff like that, and every single dollar that they make, cannot be, just put in compute, but at least it checks out, right? There are other vehicles of investment that they will do, and they'll raise more money, and all of that will obviously happen over the 5 years. But that's the whole point, that people need to see. But as I said, I think this gave the Bears a very,
Strong
uh,
reason.
yeah, it gave them a bone to chew on. That see, this is how and people were comparing it with some of the 2000 AI bubble clips and stuff like that. See, what I honestly personally feel that OpenAI succeeds or does not succeed, long term, I don't think it is gonna affect the AI growth, right? Uh, if OpenAI fails tomorrow, there are so many other companies that are ready to take its place, right?
For sure.
Google is doing amazing, Anthropic is doing amazing. Uh, Everybody else is coming up with their own models. There are great open source models as well. So I generally feel it's nothing burger, and people are just unnecessarily worried about it. Broadly, just coming back to the base theory of, there's a lot of noise, but what did I actually invest? Or what were the facts that I actually looked at while investing, right? I looked at earnings, I looked at profits, I looked at future growth, right? That is promised. These three still hold true. Hence, I'm a buyer in this market. That's the base of it. And I don't see that changing. And until that changes, I don't, kind of see the reason to, sell this.
Yeah. So there's one more reason though, one last one,
Yes.
which is that Trump announced a 50-year mortgage plan for home buyers.
Yes.
So, like, it's controversial for sure. People are saying that, if you have to buy a house, you're paying like double the interest at 7% interest rate, like double the amount, the price of the house in interest at 7% interest rate if you are buying a house and stuff like that. And then another theory that has come is that a lot of the money from the stock market will be taken out to start buying houses and properties. So that would like, again, it's a theory, we don't know, we'll need to see. So that's another sort of risk to the stock market in the near term that I see.
Right. Yeah, I heard that news again, and when I have just two counterpoints. One is that let's assume that, so first of all, I think capital is not a problem why real estate is not getting built in US. From what I have heard, again, I don't live in US, so I might be blindsided. But primarily, what I have seen, especially in areas like Los Angeles and New York and stuff, is that there are not large chunks of land left that you can build houses on. If there was an opportunity, people would have invested and built it on,
Okay.
right? So that's one reason. So I feel, because capital was never a constraint, capital coming out of the stock market should not be a concern. That's one. But let's just assume that it does come out and people start taking profit, and they see that this is a good investment versus a stock market, right? Let's just assume that. Coming back to the money market analogy, I feel that any gaps that might be created because of this, real estate opportunity that might leave the stock market, I think it will be filled by the money that will come in from money markets because of the interest rates that are going to get cut down.
That might happen, yeah. But,
So
yeah.
that's just my 2 cents on, why it will not create a gap, and suddenly a huge amount might not go out. But yeah, let's see. I mean, overall, how I would conclude this, Rodhya, is that, and you tell me whether I have convinced you or not. but what I feel is that there could definitely be a short term correction. I don't see it going more than 10% S&P at all. Uh,
Okay.
uh, but even if it does, I want to be an absolute buyer, because the fundamentals are still intact. The earnings are still great, and the projections, more importantly, because earnings, people can argue it's still something that happened in the past, right? It's not forward looking, but the forward looking projections that these companies have made, with their backlogs and everything, is still great. At least the companies that we are invested in. So I don't see any concerns until 2026 end.
Yeah, agreed. Just that, like, a lot of these conditions sort of need to improve, like the Fed rate cut and the
Yes.
government shutdown needs to
Yeah,
end
these
soon.
check
So,
boxes need to be ticked.
yeah, so like there's a lot of uncertainty in this technical analysis. So even if you see the technical analysis, right, the trend lines, even though three of them major trend lines are converging at that point, but at the end of the day, they are still going up. So
Right.
in the longer term, the markets will for sure go up. But I'm just like kind of like a riskier investor, or you can even call it like swing trade or something. But like in the very short term, very near term, so yeah.
Yeah.
Let's see. I'll keep a very close eye on the charts and stuff. So
Yeah. Yeah.
yeah,
And we'll
let's
keep
see.
discussing it in the podcast.
Yeah, it'll
Awesome.
be interesting to see.
So now I think we can move to our stock picks section, Dia.
Yeah, for sure. So I also have like an interesting one today.
Yeah.
Let's discuss them.
Absolutely. So before we get there, I just want to quickly, just skim over, all of the FANG companies. So Google, Microsoft, Amazon, everybody reported their earnings, and in all of them, there's no point of concern. Uh, Amazon, just want to highlight that they are working big on efficiency, and there are going to be a lot more job cuts that they'll be doing. The CEO is very clear about that, and it is mostly going to be in the sector of their warehouses, where a lot of it is going to be replaced, or human-based effort is going to be replaced by bots,
Robots. Okay.
right? So the company is going to work on efficiency, I think, which will improve their EPS a lot in the coming days. So that's one general highlight. And with Google and Microsoft, the news is very similar. Their cloud growth is the hero, and both of these companies are growing at a 30-40% rate with their cloud infrastructure. So that's the news there. um, Uber has, Uber again had really great earnings, and they've been growing now outside of US as well, and they're expanding in other regions as well. I think in Europe recently they became number one by market share, so that's good news for Uber shareholders. And the company looks on, really good trend to, capitalize on the driverless boom that's going to come, right? So they have the right partners in place, and they are well capitalized there. Any other recent companies that I'm missing? We'll be discussing Robinhood in detail, but any other companies that you want to talk about? Just a bit.
Yeah, I think I'll talk about Affirm later,
Okay.
probably after Robinhood.
Okay, awesome. Then I'll get to Robinhood.
Yeah.
So, just for folks, so basically, the second half of the podcast is structured around finance stocks. So, we have picked two names. I want to be discussing about Robinhood because I feel it's a generational opportunity that we're getting in Robinhood right now. Fundamentally, the bull theory is that 50 years ago, right? Or maybe not 50 years, but a lot of decades ago, uh, banking is one sector where the lifetime value of a customer is insane, right? If you have an account or a salary account in ICICI or SDFC or any other bank, you're very less likely to change it in the future, right?
True.
And then you're more likely to buy other products from the same bank, right? Now if you think about banks that are decade old, like JP Morgan, Charles Schwab, and other companies, the revenue growth and the deposit growth and the interest rate on that deposit growth and everything for these companies is generally an uptrend, because uh, more and more population had invested their money in these companies. Now Robinhood is the Gen Z and the millennial app where people are doing that, right? And it is now giving people almost all financial options. It is growing horizontally, and it is giving people all financial options that you would ever want, right? You want it started with stock trading and crypto trading. People got that was the hook people got in Robinhood. Now it is coming up with a banking feature very soon, I think in November or December. So that is going to give people a lot of banking. Yeah, it is coming up with their own cards as well, so people will have their credit cards with Robinhood. There's option trading again on Robinhood, and right now they have started with the betting app, or the predictions market, as they say, is the new growth channel for them. So overall, as a Gen Z or as a millennial, if I want to use an app for my financial needs, it is most likely today going to be Robinhood,
For sure.
right?
Yeah.
And the switching
Even
costs are very high. So the general trend is going to be upwards. Yeah, sorry, they're saying something.
yeah. So even this private stock, right? Private shares. They started providing shares of OpenAI and stuff in Europe. So access to that is did not used to be that easy earlier. I think Robinhood is on a mission to make that happen.
Yes, yes.
Private company shares.
And I just want to quickly glance over their earnings as well. So just a sec. Yes. So I hope you can see my screen. Let me just quickly cover the important bits. So the funds that customers deposited, in Robinhood is now again the news here is the growth rate, right, and the trend. So it is growing. It is now $26 billion, right? So that is an insane number. I also want to show, yeah, the thing that primarily I am, yes, this is the slide. So what you see here is the market share that Robinhood has across different financial markets, right? So there's equities, there are options, there's crypto, there's margin market, right? In equities, it has a 1.07% market share. In options, it has a 7.4% market share. In margin, it has 0.9% market share. And in crypto, it has a 1.08% market share. Now, just think about it. And the growth rates, look at this 138% growth rate in market share. In crypto, it is 100% growth in market share. So there is so much more room to grow. If you leave everything else, if we just assume that the company is not going to do any new innovation, by just increasing their market share, the company has such a clear growth trend in front of them that this is a clear buy. I would want to go to an extent and say that any drops in their stock right now is a clear buy. So I would totally, I'm definitely doing that, and I think people should too. Um, Apart from that, let me just see if there's anything else worth covering. There's one other stuff
I
that I wanted to share.
wonder when would they expand to India.
I hope so. I hope so. I hope they come to India, but they haven't shared any news yet. So yeah, this is another the volume, right? Because because it's a platform, right? It's a trading platform, so it generally makes money if there is high volume of trading, right? So just the total amount of money deposited is not enough, but the general volume of trading that is happening is the actual number that matters for them. That again you can see is just on a parabolic growth, right? So this is the equity notional volumes, this is going up, and that's causing a lot of the actual revenue for Robinhood. Again, the options contracts that were traded, so that number is going up. And again, the focus here is that this 126% year on year, the options growth is 38% year on year. So that's the news here, right? So the company across all sectors is growing by crazy percentages, and they are also bringing in new products which will bring in new set of customers. So basically foot on the pedal. And yeah, that's my coverage on Robinhood.
Yeah, I think especially this dip, right? I think there are a lot of companies, even before the earnings, what has happened in the past few months since September is a lot of these companies gave their earnings, and then they had like a huge gap up, and then over the last 2 3 months, they've gone back, like they've given back all their gains,
Right.
stuff like Oracle and Affirm.
Correct.
So I'll just share like a quick
Yes.
research which I was doing on ChatGPT and on Perplexity about the same thing. So yeah, I just asked ChatGPT, find US tech stocks that opened with a huge gap up after earning calls in September, but have given back almost all of their returns by now. So ChatGPT gave me like three of them. One was Affirm. Affirm I actually knew, even Oracle. So yeah, these two I'm sort of bullish on because of this reason as well, because the fundamentals are just getting better quarter by quarter, and the price has gone back down. So at the end of the day, fundamentals will win. So yeah, I know I'm like out right now, but these would be the one of the first companies I would be looking to get back in when I decide to get back in the market. So this was this, and then Perplexity. Yeah, Perplexity gave a few more names, so I haven't really checked them as like in as detail. But it talks about Adobe, Salesforce, and Micron technology as well. But yeah, this is something I will research in more depth in the coming week.
Got it.
And yeah, I'm actually liking the way these apps, ChatGPT, Perplexity, help you to summarize and put everything in a table and give like a
That is true. Yeah.
clean view.
I've
So
been
yeah,
starting to use. I was telling you about this.
Google
Google's,
Finance.
yeah,
Yeah,
Google's new Google Finance beta,
yeah.
which has become a really good stock research tool for me.
I'll definitely explore that this week. So yeah, I'll just quickly show Affirm's how the earnings
Yes.
went. So, first of all, like I came to know from a relative of mine who works in a firm. So he told me that they told me this last year that they're expanding to the UK. That's when my interest kind of peaked in a firm, and like their earnings, they turned profitable in the September earnings call. Like they told that they're profitable, and then even this time. They are profitable again in the recent earnings which came earlier this week. So if you see, like the active consumers are increasing, they're expanding outside of the US. uh, like overall number of transactions are increasing. There was some dip here, but yeah, then again it started picking up. So the number of active merchants are increasing. So overall, if you see, right, it's kind of checking all the, giving like a major indication that this could
Yeah.
be like a huge player in the future. Again, the
I think it is one of the
CEO,
leading players in the buy now, pay
BNPL,
later
yeah.
market.
Yeah. They give 0% interest rate, and I know,
Right.
like as a personal finance person, I don't like that. But as an investor, as
Yeah.
an investor in the company, I would really, like this kind of a growth. So that is that. And then yeah, the guy. It's like headed by the person who is from the PayPal mafia,
Right.
Max Levchin, and yeah, like a lot of promising things. Yeah, I'll also show you Perplexity. So I did this before someone told me about the Google Finance beta part. But I like Perplexity, but I like the interface of Google Finance beta a bit more.
Right.
So yeah, I asked to fundamentally analyze a couple of stocks. So one is Affirm, one is okay, CCJ, Cameco Corp. It's like a uranium related company. So yeah, if you see revenue versus net income, they turned profitable recently. The revenue is on an uptrend. The margins are increasing, the gross margin and net margin. I really see like a bright future for the company.
Yeah, I think those are the two most important things. Where if
Yeah,
they can consistently increase revenue,
true.
uh, and if they can do that profitably,
Right.
continuously, and improve their margins, that's all. That's the three core pillars of a good business. They
Yeah,
can
yeah,
consistently do that. I think they'll get a great multiple on their stock.
for sure, for sure. And like insights like this, right? I had no clue about this, that this started expanding into debit cards as well, so which is gaining traction. So since we are not in the US, I wouldn't have gotten to know this if I hadn't gone to Perplexity and asked for a fundamental analysis. So yeah, like I think it's
So do
even
you?
more important for us to use AI in doing research on
That is true.
US stocks.
But do you think
Sorry.
it has already run up too much, or do you think there's still some space because of the current correction that has come in?
There's some space for sure. Yeah, it's among the top of my. Okay. Yeah, yeah, if you see, this was the September earnings call. See the
Right.
jump up.
Right.
It went from like
Yeah.
80
It
to
is. It is
touch
given more
100.
than given up more than that.
Yeah. So and from from 80, it has come down to what? Came down to 66, and then again earnings call and it jumped to 73. So
Right.
I see like a huge growth potential also because it's a finance company, and long term, if the finance companies are doing well consistently, they end up becoming huge over time.
Yeah. Yeah.
So
Visa and
there,
Mastercard were the one of the best investments of the last decade. I mean,
yeah,
tension free if you don't want to worry about anything. So yeah.
and like it's still sub $100 billion. So I see it to be like a potential multi-bagger um, in the next 5 to 10 years for sure.
Right. Yeah. I'll check it out.
So yeah, I think that was about a firm. I'm yeah,
Yeah.
excited to buy the dip whenever I decide to buy.
Yes. Yeah, I think this was a good session, Ridya, and had fun debating you and talking
Yeah,
about some stocks. So but I think overall you were right in saying that we whether you're bullish or bearish, you need to be very vigilant right now,
yeah,
because there are still certain variables that could go either way, right?
yeah, true.
So need to be very watchful, and if you don't have time, then watch our podcast, because that's
Yeah,
exactly this podcast is meant to be.
yeah.
So yeah, awesome.
And I'll give you a caveat. So the plank challenge that I'm doing, today's video topic is how, like, should you buy the dip or should you sell your stocks? What should you do? So it's like three scenarios, and what should SIP investors do and stuff. So as a fundamental investors, which would be true for most people, it is always advised to buy the dip, because like the money supply, the global money supply keeps on
Right.
increasing. Governments keep printing more money. So the value of limited assets like stocks of good companies obviously is always slated to go up.
Right.
You should always think about timing the market. Like even the best of the best minds don't end up
That's
making good
true.
decisions when they try to time the market, and I'm nowhere close. But right now, because of so many factors which we mentioned,
Yeah.
I like took that chance. Let's see how it pays
Right.
off.
Let's see where
I've,
it
I've,
goes. Yeah.
I've gotten burned before doing such a thing, but let's see. Hoping for the
Yeah.
best.
We'll see. Let's hope it's not the same this time. But also, I think we should add a link to your other channel in the description.
Yeah,
So
I'll do.
we'll do that. Okay.
Cool then.
Fun session, Bhaiya. See you in the next one.
See you. Bye.
Bye.